Hello, everyone. I'm Dr. SAP, your friendly guide through this exciting journey of mastering SAP processes. So far, we've successfully handled the purchase order and completed the goods receipt process. Now, we are ready to take the next critical step, processing the supplier invoice. This stage plays a vital role in ensuring the financial and logistical accuracy of our operations. Together, we'll explore how to document and validate supplier invoices, review the impact on our accounts, and ensure everything aligns seamlessly within the system. Let's dive in and continue building our expertise. After processing purchase orders and receiving goods, the next step in the process is recording the supplier invoice. This task is typically handled by the Accounts Payable department, which receives the invoice directly from the supplier via email, electronic data exchange, EDI, or even in physical form. At this stage, it's crucial to ensure that the received invoice matches the agreed-upon values in the purchase order and corresponds to the goods or services already received. In this figure, we transition from the trial balance report to the Create Supplier Invoice application. This step enables us to document and validate the invoice, ensuring the financial impact is accurately recorded in the system. This process is critical to maintaining accuracy and consistency between the operational and financial workflows. Upon opening the Create Supplier Invoice application, the next step is to populate the header data. This foundational information includes company code, specifies the organizational unit responsible for processing the invoice. Invoice date, indicates the date on the supplier's invoice. Invoice party, identifies the supplier associated with the invoice. Reference, typically used to enter the supplier's invoice number, which serves as a key identifier for the transaction. This field ensures traceability and simplifies communication with the supplier. These details form the foundation of the invoice, ensuring that the transaction is linked to the correct entities within the system. By completing these fields accurately, we prepare the invoice for further validation and ensure alignment with the purchase order and goods receipt data. In this figure, we begin referencing the purchase order associated with the invoice. This step involves selecting the relevant purchase order from the available options, ensuring that the invoice items correspond to the goods received, as documented in the system. Referencing the purchase order ensures that the invoice aligns with the goods receipt, enabling accurate matching and verification before posting the financial entry. In this figure, we enter the purchase order number, and the system automatically recognizes it. The associated details, including the total invoice amount of €3,300, are displayed in the top left corner. This automatic retrieval ensures accuracy and links the invoice to the correct purchase order. Here, we review the items and quantities retrieved from the purchase order. The user must verify if the details, such as the items, amounts, and tax rates, match the actual supplier invoice. This step is crucial to ensure the data aligns with the goods received and the supplier's documentation. In this step, the gross invoice amount field is manually populated with the value €3,300, matching the amount displayed earlier. The system requires manual entry to allow for a final verification by the user, ensuring that the invoice amount corresponds to the supplier's documentation. This control helps prevent errors and mismatches that could lead to incorrect postings. Following the manual entry of the gross invoice amount in the previous step, the system now recognizes the value of €3,300, which is reflected in the zero balance displayed at the top left of the screen. This balance indicates that the invoice value matches the purchase order, confirming that all details are aligned. Now, we proceed to simulate the financial postings for this transaction. By selecting Simulate, the system will generate a preview of the associated postings, allowing us to validate the accounting entries before finalizing the process. Now, we're looking at the simulation results. On the debit side, you can see the entries for the goods receipt invoice received accounts and the input tax, VAT account. On the credit side, the vendor liability is recorded. This breakdown confirms that the system has distributed the amounts correctly. After reviewing these details, we'll be ready to proceed with posting the invoice. At this stage, we proceed to post the invoice by selecting the Post button at the bottom right of the screen. Once the posting action is completed, the system records the transaction and updates the financial data accordingly. This step finalizes the invoice processing, ensuring that the accounting entries are accurately reflected in the system. After posting the invoice, the system displays a confirmation pop-up, indicating that the document has been successfully created. The message includes the newly generated supplier invoice number. Here, we have the option to either create a new invoice or review the details of the current invoice. For this example, we'll proceed to select the invoice number to review its details and ensure everything aligns with the initial entries. Here, the system displays the supplier invoice details. This screen provides comprehensive information, including invoice amounts, purchasing document references, and tax details. At this stage, we explain what a supplier invoice represents: a document that records the receipt of goods or services from a vendor, alongside the financial impact it has on the company's accounts. This overview helps the user understand the key components of the invoice and prepares them for further actions. In this step, we navigate to the Journal Entries section by selecting the corresponding button from the supplier invoice screen. This action allows us to explore the detailed financial postings related to this invoice. By accessing the journal entries, we can verify the accounting impact of the transaction, ensuring that all entries align with the financial processes of the organization. Here, the system displays the process flow, providing a comprehensive view of the entire workflow related to the supplier invoice. This visual representation illustrates each step, from purchasing and receiving to invoicing and accounting. Such an overview is particularly valuable for understanding the interconnected processes and ensuring that each stage has been completed accurately. Users can easily trace the journey of the invoice, identify dependencies, and confirm the financial posting's accuracy. In this step, we focus on the detailed view of the journal entry, accessed by selecting the final icon in the process flow. This brings up a pop-up window providing additional details about the selected journal entry. The displayed information includes the document type, supplier, invoice amount, due date, and other relevant metadata. This detailed view ensures transparency and allows users to cross-check the data before proceeding further. The pop-up also includes a section labeled Related Applications, which enables access to further actions or related processes. Here, we navigate to the Related Applications section from the Journal Entry pop-up. By clicking on this section, a comprehensive list of available applications is displayed. These applications provide various options to explore and manage the journal entry further, such as viewing detailed postings, analyzing account impacts, or navigating related financial processes. This step highlights how users can efficiently access specific functionalities to confirm or investigate the financial posting. In this step, we proceed by selecting the Manage Journal Entries option from the Related Applications list in the Journal Entry pop-up. This action enables us to view a more comprehensive breakdown of the journal entry details. The Manage Journal Entries option is particularly useful for navigating directly to the journal document, where all associated financial postings are organized in a structured format. This feature provides quick access to critical information for validation or analysis. After selecting Manage Journal Entries, we are directed to the Detailed Journal Entry view. This screen presents the complete financial breakdown, including all debit and credit postings, tax details, and associated profit center allocations. Each line item is clearly displayed, showing the account details, amounts, and relevant financial data. This detailed view ensures transparency and provides users with a clear understanding of the accounting impact of the transaction, which is essential for auditing and reconciliation purposes. In this step, we are examining the journal entry in greater detail by clicking on the T-Account View button. This allows us to transition from the standard journal entry layout to a more visual representation of the accounts involved. The current screen displays the full breakdown of the financial postings, including debits and credits for each account, as well as tax-related entries. The T-Account View offers a deeper understanding of how the transaction impacts the ledger, serving as a bridge to more detailed financial analysis. This view provides a detailed breakdown of the accounting impact for the journal entry. It is structured into three key components. Input tax account, 1260000. Debit of €300 reflects the tax amount incurred during the invoice process. This amount corresponds to the VAT applicable to the supplier invoice and is recorded as an input tax. Goods Receipt and Invoice Receipt Clearing Account, 21120000. This interim account received a debit of €3,000, clearing the credit balance that originated from the goods receipt process. This transaction ensures that the balance of the goods receipt and invoice receipt clearing account is now zero, aligning the financial postings for goods receipt and invoice verification. Accounts Payable Domestic, 21100000. Credit of €3,300 reflects the total liability to the supplier, including the goods and VAT amounts. This represents the final obligation recorded against the supplier, ready for payment processing. This view simplifies the understanding of how each account interacts within the transaction, ensuring that the interim accounts are cleared, liabilities are recorded accurately, and tax compliance is maintained. This level of detail helps reinforce the correctness of the financial data and ensures users can trace the entries seamlessly. Now that we have posted the invoice, let's return to the trial balance screen to see how the posting has affected the account balances. First, we'll exit the document view and navigate back to the trial balance. This step ensures that we can analyze the updated financial data effectively. Let's proceed. Here we are back on the trial balance screen. To better analyze the data, let's adjust the window for a clearer view. At this stage, the report has not yet been refreshed, so the values displayed reflect the previous balances. Notice that the payables account currently shows a balance of €110. This represents the first invoice posting we performed earlier. Let's proceed to refresh the report and verify the updated balances. Now that we've refreshed the report, the updated values are displayed. The payables account has been adjusted to include the additional posting of €3,300, bringing the total balance to €3,410. This step is crucial to confirm that the posting was successfully applied to the account. Take note of the updated balances before proceeding to further analysis. Here, we've opened the side panel to explore additional dimensions available for the trial balance report. This panel allows us to customize the data view by selecting relevant attributes or dimensions. Let's proceed to select the supplier dimension in the next step. Now, we've selected the supplier dimension from the side panel. This customization gives us the flexibility to analyze account balances by supplier, offering a more detailed view. In this example, we'll focus on one supplier, vendor 001, to demonstrate this functionality. Let's continue to review the updated report. Here, we can see the payables account broken down by the selected supplier. The total balance of €3,410 remains consistent, but now we can trace the transaction specific to vendor 001. This feature makes it easier to analyze and verify account details.
Congratulations! We've just completed the critical steps of the purchase-to-pay process. In this lesson, we finalized the trio of activities: creating the purchase order, processing the goods receipt, and posting the supplier invoice. We now have a total accounts payable balance that reflects two invoices, one posted manually by the financial accounting department without a purchase order, and another processed through the complete three-way match: purchase order, goods receipt, and invoice. These invoices now appear as part of our outstanding liabilities, representing the total amount payable to the suppliers. In the next lesson, we'll take a closer look at the Open Items report, where we'll analyze outstanding entries and proceed to manually process payments for these two invoices. I look forward to guiding you through this next important step. Until then, keep exploring and learning. See you in the next lesson.